ONGC gave crucial contracts to a company called Swiber Offshore, which is in financial trouble. And we learned that Swiber's parent company has filed for liquidation in Singapore and has not been put under judicial management. What makes this worse is a scathing indictment from the former CVC, who is in a report says tenders were tweaked in favor of Swiber. Ashish Mehrishi, who is joining in with all of these exclusive details, is now with us. Ashish, over to you.
Well, in fact, it's a very important revelation. It looks like a big scam in ONGC for the reason because the report, which is exclusively in possession of Network 18 CNBC, and this report, which is the independent external monitors report, which was headed by CVC Pratyush Sinha, he had very clearly said that there is something wrong in the way the entire the tender was floated, the tender was given. Now, if you go through the important points, it says that the independent external reporters report, which was headed by former CVC Pratyush Sinha, he says that the tender of Neelam development project. Now, this is a very important project, which is the Neelam redevelopment project. It says it was fundamentally flawed. It applied discriminatory yardsticks. The report also said that there was a differential approach adopted by ONGC in the two options. Also does not provide a level playing field to the bidders quoting under the two options. Now, if you see, the bidder, Swiber, was given project worth billions of dollars. It is at least $1 billion that we know about. 4 major projects, which is laying down of pipeline, subsea pipeline, as well as redevelopment projects. Now, $1 billion worth of project has been given to this company, and this company has now filed for liquidation, and now it has also filed for judicial management, which is a temporary rescue plan. So certainly this is going to be a very, very bad news for ONGC. We have tried our best to take a reaction from ONGC, but they are not reacting to our questionnaires.
Is the auditor's report, Ashish, sort of claiming prima facie malfeasance in this particular matter? Because, offshore oil, etc., is pretty much a risky business, right? I mean, and over the last 2 years or so, with oil prices coming off the way they have, a lot of companies around the world have gone out of business. But in this case, it seems to be wrongdoing actually happened, right?
Well, in fact, there are, more importantly, there were 2 options given to the bidders, which is either deck installation by lift and deck installation by combination of float over and lift. Now, they say that why these 2 options were given, it is beyond understanding. Now, even when the monitors, when the independent external monitors asked on why this discriminatory yardstick was followed, the ONGC management had no answer. This is what is mentioned in this report. So certainly, it looks to be there is a big scam behind offering tenders to this company. That is an area of investigation. But certainly the report certainly points out that there is something wrong somewhere as far as giving tenders to this company. But now, more importantly, this company, which is having at least 4 big projects, which is worth at least $1 billion, which is around 6,600-700 crore rupees, is in jeopardy now because this company has filed for liquidation in Singapore. It's a Singapore-based company, Swiber Offshore, and now this company has gone bust, and there is no option for ONGC. Interestingly, ONGC is not replying to our questionnaire, though it's a public sector undertaking.
All right, Ashish, thanks very much for that, and we'll keep coming back to you for more on